All right, good morning, traders, and welcome to the opening bell. Today is Friday, June 12th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to wrap up the week with you guys, and it is a historic day. We are poised for the largest IPO in history with the SpaceX release. Expected to be a $1.8 trillion valuation, looking to raise about $75 billion. Initial price is expected to come in at 135, and the markets are braced for this one. Obviously, sort of a big deal, and markets have been trying to find solace and rallying on the back of this new agreement that has been reached between Iran and the U.S. Seems to be in the works. We seem to be getting some final negotiations into hand here, and we seem, at least from the president's comments, that over this weekend, possibly into Monday, to have a signed agreement between the two sides. Markets are taking solace. Oil is on the back, is on the pullback. Equities are poised to open higher. Gold finding a little bit of a low, and all of the dollar crosses finding some play. We'll go over all of those and more. Any other questions or trade setups you have, feel free to throw them on the message board. All right. Great to see everyone here in the room this morning. Happy Friday, Latanya. Always a pleasure to see you. Ashish, Dan, Kevin, Robert, Seth. Great to see everyone here this morning. Here's what the DXY looks like. So resistance held yet again, 100 spot 15 to 35. We tried to push through it yesterday. It looked like we were trying to make a pop through early in U.S. trade session. That quickly reversed. And that reversal now marks an outside day reversal off of resistance. A little bit more of an exhaustive type of signal for the potential for some weakness there in the DXY. Look, at the end of the day, all we did was come into that resistance, exhaust yesterday, pull back, and we're now looking for a break of the weekly range low. Opens up that pullback towards 99.50, which was key support, which was key resistance and is now key support. Converges on the uptrend right into the close of this week, right into the open of next week. So it's going to be a big week for markets, guys. Not only is today going to be sort of a big test with the SpaceX IPO, it's going to be seen as a barometer for all of the new IPOs that are expected to be in the pipeline, specifically Anthropic and OpenAI. So this is sort of a bellwether for the market's appetite for these new technology companies. Also, the liquidity drain that we're seeing, what other markets might kind of take a little bit of a soft blow on this, on these new releases. All of that is in flux today. Next week, you get a host of central bank rate decisions, most notably, obviously, the FOMC rate decision with Kevin Warsh's first inaugural meeting as chairman. It's supposed to be a quarterly release, so we'll be getting the SEP with the updated projections on growth, inflation, and employment, the dot plot, and the works. We'll be looking to see if any commentary from Warsh changes the structure of how the Fed disseminates this stuff, but all that's on tap next week. You got the RBA on tap next week. You got the BOJ on tap next week. You got the BOE on tap next week. It's loaded. Okay. All of that amid this flux of whether negotiations and whether the strait reopens. The promise is that upon signing of this document between Iran and the US, as per President Trump, that the strait would be reopened and ready for passage. So again, the markets are taking some solace in this. They're on a high because of the IPO from SpaceX. We're looking to see what that comes out. By the way, NASDAQ says it's scheduled for release at 10. These IPOs typically come later in the day. I'm not sure we'll get that at 10 o'clock, but I'll keep you guys updated on MB Forex with that front. For the DXY, 99.50, 99.49, that's the level of support. That's the upslope. If that breaks, the threat is for a larger setback in the index. The monthly open is 98.96, and then key support is still going to be that 200-day moving average, the May lows, the August high day close, this pivot zone right down here. So if we break, there is the potential for a larger setback towards that 200 in the monthly open. Focus right now is 99.50. Key resistance still 100 spot 15 to 35. Topside targets don't change. If we break, we go looking for 100 spot 65 into 77. And then the 101.13 level is going to be a basic 38.2 of the 2025 drop. Here's what Euro looks like. Right off support, holding the weekly lows yesterday right into resistance at former support. Remember this pivot zone very well, 1578, 1598. The 618 of the rally off the March low, the objective January low close, major pivot in price, trendline resistance. We are there. The weekly opening range is preserved right into the close of the week between two key technical levels. You need to close above 1598, basically call it 116. That slope is essentially what we're looking at to suggest that a more significant low is in place. But to get breakout reversal type of trade, you would need to open to break through the monthly open, that 200-day moving average up there. So I wouldn't stress this 38.2 at this point. We're going to look at that a little bit more of a clean breakout type of move if this clears. Questions on euro? Remember, we did the whole top-down approach earlier this week. So if you missed it, go to Monday's session. I think it was Monday. Remind me if I'm wrong. But we did the full top-down approach with the monthly, weekly charts on euro. Just wanted to highlight, guys, we're still in that corkscrew. We're still in that consolidation right below the objective yearly open. And we're looking for the breakout inevitably. But right now, here's euro right off of downtrend support this week. Here's the first hurdle, and a major hurdle it is. All right, British pound, still my least favorite of the lot, but here's the setup that I've been showing you guys. The only thing that, the only thing that looks a little bit cleaner here is the resistance zone along that 200-day moving average has been basically resistance since the start of the week. And that's right around 34.20. Just a bit higher is the monthly open, the February low day close, and the yearly open. And that extends between 34.53 into 34.73. So a 20 pip zone of resistance right above this. That's still pretty critical. A major pivot in price, right? Don't take my word for it. Here's what it looks like just over the last couple of months. So for sterling, if we are heading lower, if this is a break of that March uptrend, rallies would need to be limited to this zone. Key support still 32.90 into 32.66. That's the 786 off the low and the 618 extension off the high. Initial resistance being tested right now, the 200-day. Key resistance at the yearly open, 34.74. And then key support's well defined, but the least favorite of the lot right now. Now, Aussie. Okay, the RBA is first on tap next week. And this one's one that we've been tracking for a while. No change from the RBA is expected, by the way. But yesterday we noted the fact that the break below 70 looked legit, but we needed to find the daily close below. Let me take a step back. The break below 70 did not look legit. It looked vulnerable, right? Why? Because of the nature of price action. And that was the whole theme of yesterday, right? Like it should have seen acceleration on a break of downtrend support. You typically get like the sharpest part of the drop, but you didn't see any of that. And on the way down, even momentum we were talking about in the webinar yesterday was flagging divergence. So you were seeing divergence into downtrend support and into objective lateral support. Remember, this is my favorite fib confluence, a 618 retracement off the low of the year. The low from March and the 100% extension from the highs of the year. So a big pivot zone. That's exactly what you would look to see in an exhaustive type of move. So true that the reversal was brought upon by the announcement from President Trump. That's true. But nonetheless, the exhaustive move into the close of the session yesterday never really gave us any push through. So 70 held. You marked an outside day reversal off of downtrend support. So what does that suggest? Well, it suggests that the threat is for a little bit larger of a bounce within that downtrend off of the May high. The monthly open comes in basically right here. We're testing it right now, but the weekly open rather, the weekly range high is right there at 70.78, right along the median line into the close of the week. So if we double back and break that high, okay, possibly potentially a larger recovery within the downtrend. But remember where we are in the broader scheme of things. Here's Aussie on the weekly charts. We're looking for a potential low. Okay, is that the low? or do you get the larger extension towards a basic 236 of the advance off the low from last year and the 2024 swing high? Both of those converge on basic uptrend support over the next few weeks, 69.56, 69.42. That's the weekly chart. Momentum hasn't even broken below 50 yet. So something to take note of, which is why I'm still thinking you want to be looking potentially for an exhaustive low, because we're still in that broader uptrend. We're just working with the confines of a correction within the uptrend. So is this going to catch a more meaningful low, or do you even get a full extension for a 1618 and test that low March close? We'll see. Here's what the daily chart looks like. Okay. Here's the break below 71. That was our line in the sand all month long. That was last month's low day close. That break was the origin of this last major downspout. 70 is what we were looking for yesterday. Here's the hiccup. Here's the hiccup. Look, even if we recover all the way up into 71, you're still trading within the confines of that downtrend. Here's 71. Okay. So here's initial resistance. Here's near-term bearish invalidation. We're not going to wait for a break of the upper parallel. If we get past 71, it would suggest a more significant low is in place and a larger recovery is underway. That being said, you're still bearish below 71. You know what I mean? So maybe a little bit more of a hiccup, maybe a bounce within this trend. But at the end of the day, you need a confirmed push and a validated close below 70 to mark resumption towards that 69.42, 69.13 huge region. 2024 high day close, 2024 swing high. Again, the uptrend for that larger November advance and a basic 236 of the advance off the lows from last year. All of it is right there. So that's what I'm thinking with Aussie dollar. Again, the RBA is on tap first next week. No changes expected. Everyone's going to be talking about the inflationary outlook. If this ceasefire is legit and this peace deal is legit, you're talking about the straight reopening. You're talking about potential easing of inflationary pressures by way of energy prices. And certainly that might further kind of just ease and improve the market sentiment as far as markets, central banks having to possibly raise more rates. As it stands right now, Fed fund futures, let me update these for the most updated one. Fed fund futures have budged just a little bit. Here's the December print. So we were looking at a 70% likelihood into the start of the week that we will see at least a 25 basis point hike. Now it's down to 60%. So as the situation in Iran improves, you're going to see those bets that the central bank's going to have to do something to curb inflation start to abate. Now, it remains to be seen whether my suspicion is that some of the damage is done and the inflation is still going to be sort of a lagging effect. So we're likely that we're going to have to see at least a hold to the end of the year, if not a tighten. That's just my humble opinion, guys. The markets are pricing in still a 60% likelihood that we'll have to see 25 basis points by the end of the year. So we'll see if that changes into the FOMC decision next week. RBA is on tap Monday. Questions on Aussie? So dollar CAD, which is the one that looked like the most convincing breakout, doubled back and closed below 39.83, 39.77. Remember, guys, that was the whole objective yesterday. To confirm this breakout, we needed to see price close northbound of that 38.2 retracement from the decline off of the 2025 swing high and the 2022 swing high. Really nice pivot in price. It was our first sort of leveled resistance. Here's what it looks like on the weekly chart. We couldn't get a breakout. This was also supposed to confirm a break of the yearly opening range. So we're right there, okay? It's not necessarily a confirmed sort of exhaustive pullback yet because we haven't even broken uptrend support, but certainly that close back below there doesn't bode well for the immediate upside. Here's the momentum signature, still flagging some divergence there. It's not the strongest signal, but it's there. And here's what the intraday chart looks like. Yesterday, I told you if we're heading higher, we want to see 39.69 hold support. That's just the objective weekly opening range high. We dropped into it, held the median line, And then we basically closed right there, still below 39.85, which is what we're doing right now. So watch this one closely, guys. It's still one of my favorite setups. It is a mature advance at this point, as you can tell, but we're still in overbought condition on the daily chart. The bulls still have it. You're testing a major lateral level. Watch the weekly close with 39.83. I want to see us close northbound of that to keep the immediate upside bias in play towards 40.35. That's 2 equal legs off the yearly low. But this needs to keep this needs to budge today. Like, we need to close above this. So it's encouraging that that same exact slope, it's crazy that that slope's still in play, but that same exact slope we've been tracking since May. Look at the median line action this week. Break, resistance, break, support, support. Still looking for support there at 39.69 if we're heading higher. Next level up, 40.35. If we break back below this slope, bullish invalidation is still at the May high. But if we break back below the weekly open, or if we break back below that 25% parallel, likely to get a larger pullback, maybe even test the 200-day. Still like the uptrend, but you're still testing resistance. So that's where we are on dollar CAD. BOC was out of the way, so that's kind of cleared out. And the major event risk is limited from the Canada side of things next week. Really, the dollar is going to be driving most of this. All right, dollar yen. I'm actually writing a piece right now for it, just as an update for FOREX.com, but nothing really changes, guys. The dollar yen resistance zone is just absolutely critical. 60, 29, 60, 73. We're still there. We're still there for a second week. We are poised to close higher this week, which would constitute a 5th consecutive weekly advance, but doesn't matter because we're still at resistance. So the daily chart highlights it like this. Yesterday did mark the first sort of meaningful pullback since the lows we registered last month. It did constitute an outside day reversal pattern right off of resistance. And what do I always tell you guys? That puts just a quick key focus on a breakout of that single day's range. And that's what I'm looking for. Monthly open support comes in at 59.27. A break below that level objectively would be your signal for a more meaningful pullback. Northbound of 60.73. It's like a 100 pip rally before you run into any major meaningful resistance near the 2024 highs, the high day close. You're talking about 61.70, right? 61.69. So it's really make or break here. It's also the objective yearly opening range. So if we breach here, you're looking for a third, fourth quarter high for the year, right? There's a lot of implications on a breakout for dollar yen. All the while, the intervention threat looms. So that's sort of the caveat with anyone who's getting into bed with a dollar yen setup over the next couple of weeks. At these levels, is that you're playing with fire, because at any point they could come in with another stretch to kind of curb this advance. But all things held constant from a technical structure, man, you are testing resistance. You just marked an outside day reversal off resistance. Look for a breakout of that candle. Well, long bias is vulnerable sub 60.74. Make sense? And that's the same slope. That's the same slope, guys. We've been tracking since that high. Remember, this slope is just mimicking this basic trend line. That's all we're doing. So if this break below the median line is legit, it would suggest that you got a threat of a test of uptrend support. Guess what? That converges on the monthly open right into next week. That's dollar yen. Last but not least, dollar Swiss did a similar thing. Yesterday marked an outside day reversal off resistance. Remember this, I published a piece on FOREX.com on this, and the focus was that the long bias was vulnerable into that high day close at 79.93. Took a while. We did mark one day close above there, but there was the outside day reversal yesterday. And on the 4-hour chart, just uncanny how that slope just continued to hold. Divergence all up in that high, right? Bring up the 4-hour. Series of higher highs, series of lower highs. Once you get past that 70 threshold, this is what I would consider like a stronger divergence signal, right? All the reference points are closer to 50. You got lower highs in the oscillator, higher lows in price. and there was the exhaustion. Again, the catalyst was that commentary from President Trump getting you the kickback here. Now, all things held constant, you haven't even broken the weekly opening range low, to be fair. So you haven't really marked a reversal per se yet. The reversal candle keeps the focus on a breakout of that candle's range. The threat is still, the long bias is vulnerable below 79.93, but you're still constructive above 78.73. Okay. Initial support still 79.25, 79.26. That's the yearly open. That's the 618, the drop off the November highs of last year. Really nice pivot in price. That's initial support, backed really close by the 200-day moving average. Ideally, if dollar Swiss is heading higher, losses would be limited by that zone. Bullish invalidation, though, is down at 78.75. Next major resistance zone on a push through that high day close opens up 80.40 into 80.32. That's the 618 extension off the low. That's the objective January high. Look for a larger reaction there. Again, that's the yearly opening range high. So if we break there, objectively, that has longer term implications for the months ahead. That is dollar Swiss. Gold. Here's what gold looks like. So strong rebound off that level of support that we had highlighted at 40.74, 40.90, 40.98. We closed the low at 40.72. $2 right below that. Yesterday, strong reversal right back into resistance at former support, 42.24 into 42.51. I'm looking for a reaction here. Here's what it looks like on the 4-hour chart. Here's the median line right there. There's that 100 and the October reversal close. Looking for inflection right here. If we break and close northbound of that zone, it would suggest, guys, the potential that a more significant low is in place. Now, it's too early to, get cute with this, but that's kind of the risk with gold. Let me take you back to the weekly charts again for a reason. Here's what it looks like on the weekly chart. And this is why the extent of the reversal off this is going to matter. Okay. Here's the last time we tested this zone back here in March. This is the 618 extension off the high. This is the October high week reversal close. Very nice pivot last year. Caught the lows back in March. Boom, right there. Now, we dropped right there on the lowest momentum read that we've seen since 2023. Okay, that was the low right there. You drill it down to the daily chart, similar scenario starts to manifest. This is the lowest momentum read that we've gotten since that 2023 October low. Same thing. In time, it's a little bit ahead of schedule. Would have liked it a little bit later in the summer, but we're close. So that is all to say, respect this range. Sub 40.74 is extremely risky that you see, again, a drop towards the November low. Slope doesn't come until 39.30. That's another 70 bucks to the downside if that breaks. If we break above the median line, we got to respect the fact that, again, not necessarily that a low is in for the year, but the potential that medium term we could see a larger reversal, a larger recovery after this major decline off the highs. Remember, gold has seen some pretty precipitous declines here. I don't have my notes on me that I wrote a couple days ago, but the gold decline off of the highs, just to give you guys kind of a reference here, this is already marking 28% off of the high. I think just off of this month's high, we're down 11% at that low. So it's stretched, momentum reversed and closed RSI back above 30 yesterday. So there is the exhaustive signals are starting to manifest here on gold. Watch that range breakout near term, critical zone over the next 24, 48 hours. Questions on gold? All right, quick recap on oil. So 85 is being challenged, but here we are. Okay, we bounced right back above it. That's the level. That's the line in the sand. Don't forget about it, okay? The oil decline needs to close below 85. Remember, 85 is just an objective level. It is the high day close for the year. On the onset of the war, when oil broke out and marked that rally towards 119, the close of that day was 85.04. We checked it as support a few days later. It was the low day close for April. We're testing that now. That's the close you need to validate. Okay, we've broken at least this near-term multi-month consolidation. Make sense? Just scanning the headlines here if anything hit that caused that rebound, but that's the break you need. Next downside level, by the way, 79.60 into 80.75 if you do get that break. And that's going to be the 618 of the rally, as well as the 2025 high and the high day close. Big pivot zone. That's the lows from April. So not too far off, but 85 is going to be the critical zone. If we resolve the week back above that, we're still in that same consolidation zone. Last but not least, Bitcoin is still holding right in that same zone. Remember, the low day close, or the low close, excuse me, for the year is 60,859. That's been support all week long. This is your focal range break for Bitcoin on the near term. The threat is still for a drive down towards that 57,885, 58,725. It's a key zone of support on the weekly chart. Converges down on downtrend support later this month. Resistance still 64,955, bearish invalidation at 70,283 into 531. Dan says, seems like Bitcoin is vulnerable to those liquidity outflows due to SpaceX you mentioned earlier. I completely agree, Dan. Yeah, we'd spoken about that earlier in the week, right? I think you're gonna start to see that in some of these underperforming assets, specifically more on the speculative side like this. From an investing standpoint, kind of makes sense. I don't begrudge them. Kind of makes sense, but we do need to be aware of that. Absolutely. And depending on how today goes, it's not over. Like I said, we still got OpenAI, we still have Anthropic. The IPO list is starting to grow, and we're talking about massive valuations. So the liquidity sap might continue if today's is a huge success. If today doesn't go well for SpaceX, which I have no reason to think it won't, but if it doesn't, that does have longer term implications, I think, for market, just on the sentiment of the IPOs coming out. So it's going to be an exciting day. Buckle up. Keep some powder dry, because right on the back of this IPO, next week is loaded with central bank rate decisions. Again, the RBA, the BOJ starts us off on Monday night, and then the RBA as well. Then we go into the Fed, the BOE, and hopefully some fireworks if we get some sort of real strong resolution to the conflict in Iran. All right. Take us right into the 10 o'clock hour, guys. Thanks for joining me every morning this week. Stay nimble into the close of the week. Like I said, next week's pretty big. Keep your eyes on the headlines. I'll keep you updated on MB Forex of anything major that hits the wires. Till then, best of luck trading. Have an awesome weekend. And I'll see you on Monday morning at 8:30 Eastern for a full hour on the weekly technical outlook. And then right back here in the opening bell at 9:30. Till then, have an awesome weekend, guys. God bless.